The Taxes tab on the Employee Setup manages the taxes that the employee is responsible for after a pay run is generated, as well as the taxes the employer is responsible for on behalf of the employee. I will return to Setup and Employees to edit our employee that we've been working on, and we'll return to their detail here by editing them and going to the Taxes tab. As I'm highlighted on the Taxes tab, I am highlighted on the first employer on the list. If I had multiple employers in this database, each one of them would have their own level on the tree. You'll see here if I click on the minus sign next to that employer, it collapses all the taxes for that employer. And then if I had additional employers, they would be listed underneath. I'm going to click back on that plus sign. You'll see here on this employer that federal taxes have been added by default and state taxes have not been included by default. You will need to select the state taxes for that employee by clicking on the appropriate state. So I went ahead and selected Illinois for this particular employee, but if there are multiple states needed for that employee, you could select each state. On this screen, you'll also notice that there is a section here that says that we are hiding inactive items. If for some reason later down the road you've been using a tax on an employee and that tax is no longer valid for that employee, you can not remove it once a pay run has been generated. But what you can do is make it inactive. So as I highlight any one of these taxes, you'll notice that there is an active status at the bottom. If I remove that, it makes it inactive, which would make it disappear from this list by default. However, you can just click on this middle bar here to go ahead and display those inactive items. You just can't remove them from the employee once they've been used. After I've selected the states that I need on the bottom over here, I'm going to look over here on the right-hand side, and you'll see that the system went ahead and defaulted this employee's tax state and SUTA state as Illinois. That wasn't because I selected Illinois over here. That actually came in because of the employee's address being in Illinois. So if I don't need to change those, I can go ahead and leave them. But if I needed to change any of those, I would click on the selection to the right there and change it to one of the other valid states for this employer. If this employee needs to have taxes taken from more than one state, you can add a second tax state by clicking on second tax state and then selecting the other state in the box. You don't want to do this though if they only have a single tax state. So you don't fill anything in there if they have a single tax state. You'll just leave it as the tax state up at the top. It does set the SUTA state the same as the tax state by default. However, if you have an employee who works in one state and lives in another, you might need to set the SUTA state as different than the tax state, so you can select it from the list of valid states for this employer. The last thing on that list is if you are using CenterPoint to calculate what your workers' comp liability should be each pay run by posting it to a liability, or you're using the CenterPoint to calculate a report that would show you what your workers' comp liability should be, then you're going to want to set up workers' comp classes and then set for this employee what their default workers' comp class is. Now, an employee can work in more than one workers' comp class. Only one can be the default. So you'll just want to set the default here, but it can be changed while you're doing a pay run or entering in timesheets. At this point, though, if I were to click Save on this employee, I probably would still get an error saying that the tax state, the SUTA state, and the the workers' comp class are invalid for this employee. I'll probably continue to get that error until I complete the state setup. So that's what we'll do in a minute, but we're going to go through some of these federal taxes first before we get to the state setup. The first one is, so I'm going to highlight federal and show you that at this point, because I haven't done a pay run yet with this employee, I could actually remove a tax. So if I wanted to remove federal unemployment, I could just remove it. Okay, I didn't really want to do that for this employee, so I'm going to put it back, but I wanted to show you that as long as you haven't done a pay run, you can remove any of these taxes. Once you've done a pay run, the only thing you can do is make it inactive. I will highlight the first tax on the list, which is my federal withholding. And when I'm highlighted on the federal withholding on the right-hand side of the screen is where I'm going to need to capture this employee's W-4 information. So the first thing you'll want to do is put an effective date for the date that they filled out the W-4. So just click Add and then put in that effective date. Mine is 1/1 of 2023. You'll choose what they've selected as their filing status. Now, if that person's W-4 is filled out prior to 2020, you'll need to put in the number of allowances in the allowances box here. If not, then that box is ignored for the 2020 and later W-4s. So if they filled out a W-4 that is 2020 or later, you'll select this box right here. And then on that 2020 or later W-4, there's a place there for them to mark whether or not they have multiple jobs. So if they have, you'll put that selection in there. And then there are places for them to put in a dependent credit amount, an other income amount, and a deductions amount. So if they filled in any of that on their W-4, you'll want to make sure that you put those amounts into the appropriate boxes. There is a place for you to mark whether or not this person is a non-resident alien. If they're not, then you just don't mark it. But if they are a non-resident alien, then you'll check the box. Now, some employees, no matter what the tax tables say, sometimes want you to take out an additional amount. If they do, then what you'll do is put that amount in here, and that becomes a per pay period amount, not a per month amount, not a per year amount. It's a per pay period amount. So this is an amount that would be taken each paycheck. I'm going to set that back to 0. Other options would be that an employee possibly wants you to completely ignore the tax tables and use an alternate flat tax. So I could use an alternate flat tax amount and then put in what that percentage amount is in the percentage box there. So then the system would multiply that percentage times their federal taxable wages to get the amount of tax that should be withdrawn from their paycheck. I'm going to take that off and set that back to 0 because I really didn't need that for this employee. Then I'll move on to the Medicare tax. Well, with the Medicare tax, there really isn't a whole lot to fill in. There really isn't anything at the employee record. The only thing that you might want to be changing here would be that when you added this new employee, it defaulted in the expense account that was set up at the employer level for this tax. If it needs to be a different expense account for this employee, this is where you would override that. If it needs to be split among multiple expense accounts, you would put in each expense account and its percentage, and then go down to the next line and put in the next expense account and its percentage. And that list can keep growing, so you can have as many expense accounts as you need to split that wage, as long as the percentages add up to 100. The same thing for Social Security. There really isn't anything to do until we get to the employer's share. So again, it defaulted the expense account set up on the employer record. And if you need to override it, we can override it here. For federal unemployment, it again shows us the expense account that was set up when we set up the employer, and it defaulted that expense account here, but once again, I can override it for this employee. For those employees that reside in states where the state pays back a credit on the unemployment, you can override the federal unemployment rate by saying that you want to use the full rate. Okay. For Illinois then, so now I'm done with all of the federal taxes. I'm going to move on to my state. For any state that you've selected, what you'll do is highlight the state at the top, and then down at the bottom, it's going to show the additional state taxes that you can add. It's assuming I want all of them, but if I need to or want to remove any of those, I can. Additionally, if your state had any local taxes and you've set up those local taxes, you would have a checkbox here for the local taxes as well. I'm going to open up my state and I'm going to highlight state unemployment. Very similar to federal unemployment, the state unemployment is defaulting a tax account that we wanted those taxes to go to for the employer's share of that expense. Okay, and so if I need to override it, I can. The Illinois state unemployment withholding, or the Illinois state withholding tax here. So whatever state you're on, you're going to have a withholding tax. And again, you're going to want to fill out their W-4 type information for that. So what are the number of allowances they're selecting, and if there's any additional allowances. The details that you have over here on the right-hand side are dependent on the state that you've selected. So different states require different things. So it may be that information that you see there is different for your state. What will be the same though is that for this tax, you will have the ability to put in an extra withholding amount or to override the taxes by using a flat rate, a flat tax percentage rate, which we had discussed on the federal withholding. Okay, lastly down here, I'm going to move over to workers' compensation. And I want to at least select the workers' compensation class that I set up earlier when I was back up here at the employer level. I selected the workers' compensation class for that employee here. So minimally, when I'm down on the state and down on workers' compensation, I want to at least add that class. But if this person works in more than one workers' compensation class, you can add that additional workers' compensation class as well. And then for each of those workers' compensation classes, the only details you really need to worry about is if you want to override the expense account that was selected for that tax when you set up the employer. So if you need to override that for this employee, you can override that. Other than that, we are done with the taxes tab. So I should be able to hit save and save those taxes without error.